If you have a tipped employee, such as with a restaurant owner, you may qualify for the FICA Tip Credit. Stay right here to watch my show on the details and learn a tax savings tip for your next tax filing.
Welcome to this episode of Accounting and Tax Tips. Smart strategies for small business success with certified public accountant Tina Moe.
The IRS offers a business tax credit called the FICA Tip Credit that may be a significant tax savings for employers of tipped employees, typically restaurants. The first thing you have to know is the definition of a qualifying tip. According to the IRS Revenue Ruling 2012-18, tips earned by waiters in a restaurant are defined as payments not previously negotiated by the employer and where the customer has the right to determine who the recipient of the tip is and for how much, and of course, the tip is made on their own accord. Employers and employees are both required to pay FICA taxes on these tips as they are part of the total compensation paid out to employees. In case you didn't know, FICA taxes consist of Social Security and Medicare tax that is shared by the employer and employee. So how is the tip credit calculated? Basically, the employer's share of the FICA tax on tips dispersed to employees are claimed on Form 8846. Credit for employer, Social Security, and Medicare taxes paid on certain employee tips. Yes, that's actually the name of the form. Let's say it again together this time. Credit for employer, Social Security, and Medicare taxes paid on certain employee tips. Long form name, but an advantageous tax credit worth investigating if you own a restaurant. Now for that tax savings tip. Millions of Americans are covered by a high deductible health insurance plan coupled with a health savings account, commonly referred to as an HSA. If you contribute less than the legal maximum to your HSA through payroll deductions during the calendar year, you can still deposit monies into your HSA account up to the maximum levels and cut your income taxes down. Even though you wouldn't make this after year-end contribution through your employer, you can still send the money directly to the bank that holds the HSA account. I love this tactic because HSAs have a threefold benefit. You stash money pre-tax, it grows tax-free, and when you take it out to pay for medical expenses, it comes out tax-free. Just be sure to make this additional HSA deposit by April 15th, even if you plan to file an extension for your taxes. Pretty cool stuff. For more information on this and other cool tax stuff, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.